All right. Welcome everybody to FX Street and this edition of Trade with UFOs. And this is Nailing FX, the US session, and it is March the 25th. And it is just a little bit past 9 p.m. here in Singapore. And if you're in the US, it's probably closer to a little bit past 9 a.m. And if you're in Europe, it should be about 1 p.m. GMT time. So welcome. And it's the end of the month. Time goes by very, very quickly these days. And I don't know whether it's been all of these COVID restrictions and limited movement, or it's just you know it's just getting out, not being able to really, we can get out, but not as much as we, I guess, used to. So hopefully those is kind of changing where you're at, wherever you live around the world. But one thing that is good is we can still have access to the markets. Can you imagine what it would have been like if we do not have the internet, or at least have the internet, but not at the speeds that we're able to access it now? So the wonders of technology, Now, if you're joining us for the first time and you wanted to find more about Trade with UFOs, then you can go to www.tradewithufos.com/Andrew, and you can sign up for a free membership at our website, and you can peruse around the website there. Actually, why don't I just jump over there now? You can just click join us, right? And we have, you can be a free member forever. Just click on the button there and it'll take you there. But you can see our schedule for what times I'm on. Usually here on FX Street around this time well, not every Thursday, but most Thursdays I am on this channel. Otherwise, you can find us if we're able to get to my schedule here. Oh, there's Jose. Well, that's a bit more about us. I think our schedule is there it is, finally come up. For March, kind of we're at the tail end now. If you want April, we should be up there on for April. Oops, flipped the year. If we are for April, yeah, we haven't scheduled all the way out till 2022 yet. But for April, it should be out there. We should be out there. And it's not out there yet. Okay, so if you want to navigate and see when we are on, so if you're interested in learning a little bit more about futures, we have futures, there's options, there's stocks, there's also Nailing FX with me, and then there's different sort of coaching sessions, Head Start, about trading psychology, and then sharpening. So more stuff that doesn't require the markets. And so those are on the weekends with Becky. And then there could be some different sort of special events highlighted in yellow, or exclusive courses that we do in purple. So they're all color coded there for you to know immediately what is what and when is stuff is on. So you can kind of see that we tend to have futures at the beginning of the week, options in the middle of the week, and stocks and sort of forex, and also kind of mid and late in the week, right? So you can take a look at the calendar. And then, of course, we have our YouTube channel. And so what Becky and Boyan do basically every day is go through the three-dimensional 3D market commentary. And so if you want to take a look at that later, maybe Becky is still on there. So, oops, yeah, Becky is starting kind of soon. But I think that's the recording there, streamed 15 minutes ago. But you can go there and get the latest commentary of what to look forward to in the market that's coming up. And so commonly what Becky or Boyan do is just go through the newsletter, which you'll get when you sign up for our free membership. And they will basically just go through, dollar index, the S&P, various markets that are in the newsletter every day, and talk about the UFO levels and volatility and a number of other things that you need to pay attention for the day. So it's always a nice little, just a short 20 to 30 minutes that they spend going through those markets, just to give you a good start to your trading day. Then, of course, for us, we want to take a look at the economic calendar, see if there are any key events coming up today. And a number of things have already come out this week. In particular, if we just go to this week, we did have, the Fed chair talking earlier, as well as the about their outlook for the economy. We also had the BOJ release their minutes, their policy minutes, and you have a FX Street here have a slew of information here for you to pay attention to, especially if they're highlighted in red. And so later on, we will have the different central bankers come in and talk is what had happened during the day, especially in Europe. But really coming up in the coming Friday is retail sales for the pound that could affect the pound. Kind of some medium impact type of stuff hitting the US, such as compensation, personal income, things like that. But next week, the key things coming into that we're going to have to pay attention to is, of course, ADP on Wednesday, which is kind of a precursor of the employment number that we will expect on Friday, the non-farm payrolls report, which is expected to be about 500,000. So we'll see what the numbers for March are going to be on Friday the 2nd. Lucky it's not the first. It could be April Fool. So we're not looking for any jokes coming up on for these numbers at least. So I think again, kind of the end of the month, there's going to be, especially the quarter, in particular the quarter, there's going to be some window dressing going on in the markets, to make sure that those guys in the financial industry get paid, right? And they get paid based on performance, and the market's just been going up and up. And so we'll see if we get some interesting trading, especially on the stock indices over the next couple of days as they kind of dress up their books, okay? But for now, we're going to focus on Forex, and the US dollar, of course, is one that we kind of always start with, and because what that does is it gives us a sense of where all the money flows are coming into, since it's an index, is made up predominantly, it's a basket of the currencies, kind of weighted more towards about 60% to the euro, and then a mixed bag around the other majors, the Aussie, New Zealand, pound, and so all relative to the dollar. And so it's a nice way, if you have never looked at the dollar index, to get a sense of, as the reserve currency of the world, where money is flowing into. So if money is flowing into the US dollar, it means that it's coming out of everything else, right? And so it could be, a good indicator of, whether people are trying to move out of these other markets, and if they come back into the US dollar, they're obviously going to have to park their money somewhere. So it's either going to go into some dollar-based assets. It could be real estate. It could be, private equity. It could be, other investments. Could be at the stock market, or it could be U.S. Treasuries. It could be, gold based in U.S. dollars, right? And or it could be commodities. I mean, the U.S. dollar is needs to be converted to in order to purchase U.S. assets, U.S. commodities, or U.S. based, uh, you know, products, priced in U.S. dollar, which could therefore be anywhere in the world. But more often than not, it would be with some sort of multinational company who is maybe pricing things in U.S. dollars. So the U.S. dollar is therefore still an important currency to understand and look at, and the great indication of the money flows in and out of the US dollar is going to be the dollar index. Okay, so that's why we look at it. And so as we can see here, one of the things that we were observing last week was we had paused really at this point here. So it's Thursday, that's Wednesday, Tuesday, Monday, Friday, and Thursday. So last Thursday we were seeing this picture, and prices looked like they were wanting to move down to this 91 number, right, around this area here. But what happened instead was the dollar did kind of move higher, and now is moving towards this 93 number. So there was strength over the end of last week into this week, and so we never got down to this 91 level, and so but still prices did project higher as we anticipated. And these were the couple of scenarios that we had been looking at. Moved down to 91, or it could have moved all the way down to the back down to the 90 a quarter level before heading back up, and that still would have kept the trend in an upward direction, although it would have been a deeper corrective type of move, but it ended up being more of a shallow move. And if you're into Fibonacci's as well, then you may have wanted to use your Fibonacci's to give a sense of the type of retracements that could have aligned with these various levels. And so at this point, we had a 38.2% retracement, which kind of lines up with that prior high. And so you had this price movement oscillating around that level, and that level was 91 and a half, well, just a little bit around below 91 and a half. But these quarters, these whole numbers, all have a they kind of trade around those numbers, so it's not always going to be precisely at 91.50 or 91.25 or 91. It's always going to be oscillating around that sort of number, but they're a good magnet for trading activity, which is why we're looking more towards price move up to maybe 93, and if it really gets pushes through higher, it's going to get past that 93 and a quarter, and potentially move higher if it kind of breaks some of those some of those key levels. But for the moment, we are kind of putting a little, had a bit of a pause yesterday. We'll see how we end up today, whether we just get that push higher before we get really deep into this resistance area up here, denoted by a sell UFO. And having said that, let's just throw those on. Yep, so that's where we've got some sell orders expected to kind of come in and give a bit of a resistance to prices moving any higher beyond that past pivot high there. On the below that, we have the buy UFOs, so we have quite a big range here, just underneath current levels, and then we have some other levels lower down. But that's just give us a big picture perspective. And if we look at the climate, of course, we've seen really since the beginning of March, quite a strong push higher, a bit of a retracement that we saw last week, and then this push higher, right? So kind of giving this, this wave structure. So if you're into Elliott wave, you have this one, two, kind of first wave, pull back on the second wave, third wave, fourth wave, and then the fifth wave up here on this sort of big picture. And then, of course, you've got the subwaves if you're into really getting into Elliott wave and doing all those wave counts. But if you kind of just look at things from a big picture wave perspective, you also know that once you clear prior highs, those also tend to be significant points at which traders tend to pay attention to. So dollar is moving higher, but running into some resistance. So what that means then at the end of the day is look, if you didn't catch the prices at when they were lower down, then you're kind of running out of room here to be a buyer, but you still want to have a bias to the upside, because it could continue. I mean, we don't know. We expect price to hit some resistance here, and so if you were long down here or down here or down here, then what you would want to do is just prepare, right, to take profits and potentially trail your stop if that's how you manage your trades, right? So we did have a move upwards to this point here. We didn't get this move like this, right? But we did get that retracement. So some of these retracement levels, line up nicely with the UFOs, and if it doesn't line up on these higher levels, then potentially on the intraday or more of a swing type of trade. If you're a swing trade, then this is where you get the unfilled orders getting identified here. So if you do want to look for pullbacks, these would have been potential pullback areas, which we didn't see any retracement in here, but these would have been areas where you could have planned for some sort of entry for a continued move to the upside if that opportunity presented itself, which it didn't. So as soon as that unfilled order area was formed here, it did not pull back, and so if you're looking to buy on a retracement, then you really have to wait until price does kind of pull back. And as you can see here at these lower levels as well, you can refine your target in that sort of sense to where these unfilled orders are expected to find itself or find themselves. I'm just going to put that resistance level at the top there, right? So that kind of up until that point, that's where you want to, you could take, you expect some sort of resistance up at that area for price to move. And so what the auto UFOs does is, along with your other techniques, right, for planning or assessing, you're planning your trade, giving you that perspective, whether it be the Fibonacci's like this, or whether it be some sort of trend line, or maybe use moving averages, maybe you use some other, indicators or techniques to help you analyze where to, what the market is doing, and also where to enter your trades. And so auto UFOs is complementary in that sense to the other trading strategies or the other trading techniques that you currently use. Or if you are new to trading, you can always learn from us how to apply auto UFOs and auto climate, right, to your trading analysis as you learn how to trade and navigate these financial markets. But these indicators for these apps for us answer two questions. Basically, number one is it the right uh, you know conditions, right, to trade, and so that's what the climate helps us with, is kind of tell us the weather, that sort of sense. And so at the big picture, time frame, it's telling us blue, which means that the climate is conducive to good times, to upward moves. And so it's blue, and if it's a nice solid blue circle, that means it's a confirmed up climate. Whereas if it's a red circle and it's a thick red circle, it means that it's confirmed down climate. So in that case, we would want to look for selling opportunities rather than buying opportunities on, if they're blue, right? So any other, indicator that you or strategy that you use, if it helps you to answer that question, what should you do in the current market climate, then you can use that. Otherwise, we use auto climate to help us answer those questions. And then the second question that commonly you have to have an answer to is, right, if there are opportunities for us to buy, then okay, where do I buy? What price do I buy? And so do you have information available to you that will tell you or indicate to you where a good price is, right? What's cheap, right? Because yeah, for dollar index, if you're trading the dollar index, which you can only really do through futures, you know, uh, where do you buy, right? And so, yeah, everybody likes to buy cheap, but where is cheap, right? Is cheap down at 90.25, or is cheap down at 91, or is cheap, here at 91 or 92, right? And so again, it kind of depends. If you're a swing trader or a position trader, then cheap to you is probably going to be, all the way down here, because you tend to hold your positions for a long, long time, and so you want to get it as cheap as possible, so then it can just move away as far away as possible. Whereas if you're an intraday trader, then that's where you tend to look at these lower time frames to look for those opportunities which are kind of closer to current price, so that price doesn't have to move too far in order for you to get into your trade and then to get out of it. And then really, if you're a real short-term trader, then that's where you would go to these even lower time frames, and this is where the auto UFOs is kind of cool. It identifies these areas for you very quickly. You don't have to, go and, you know, even think about it. You just turn the app on, and it does it for you, right? And so you can do your analysis very quickly. You can say, all right, I'm in an uptrend here on a fifth, which is clearly, what's going on, right? So it's an uptrend, and depending how you want to draw your lines here, right? You may say, all right, if we're in this uptrend, from this pivot point up to this pivot point, I expect price to come down here and then bounce off. So you can really align, right? If I just open this up here, you can align quite easily that if this next bar when it finishes in 12 minutes, if it reaches down to this point here, that will still be above that trend line. If it doesn't reach there on that bar, then maybe on the next bar it will come down, and hit here and then move up, right? And so if it breaks that trend line, then okay, you've basically got a little bit of room down here for where you have your stop to get out. So there's an intraday, that would be an intraday sort of trade there, on a 15-minute where you're wanting to be in and out very within the day itself, right? And so if you're not comfortable with that time frame intraday, then maybe you go for the hourly, in which case the UFOs identify this area down here, and so you're going to have to wait obviously a little longer because now it's going to take an hour for that bar to complete. So the current bar is going to finish in about 11 minutes, and then you've got to wait another 60 minutes for the next one. But it's probably going to take a while for it to get down here, right? Because it took, to get up to that point was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's 12 hours already to get up there. So maybe not so much of an intraday type of trade as it is maybe a weekly trade that you'll be in for, maybe a couple of days or a few days. But you probably want to close it out at the end of the week sort of thing. But yeah, so this is how the app works. It's very quick to do your analysis because time is money, right? And you want to be able to do your analysis, and then you want to get out and have dinner. You want to go out, look after the kids. You want to do other stuff with your life. You don't want to be stuck in front of a computer trying to work out, where all these areas are to buy and where to sell. You want, technology to help you do that quicker, right? And so, in particular, if you're an intraday trader, you want to be, in and out of your positions, within a day. You want to be able to do your planning maybe in the morning. And there goes the bell for the US Open. And here we see the US dollar is coming down here, right? And so we'll wait to see if it comes in and then if it bounces off. And if you're looking to plan a trade, and you probably want to do it on the euro actually, and probably that's what I should do is jump over to the euro and look at the inverse. But this is, this is about that's about four. Uh, uh, the stop is the entry is 60, so it's only like 4 pips, which is not a lot actually. So if we kind of rounded that stop down to 50 and the entry at 60, say have about 10 pips, but then you want to take your profits, let's say if it's at least 1-to-1, right? Then this is kind of how you would look at things, right? But this is this is how UFOs could help make your trading decisions a little bit more efficient, more effective. Um, and let's just jump across to the euro, just to kind of see the inverse of that. And as you can see here, it's already entered into that area. Let me just take it up a little higher, right, on the hourly. And we see some sort of retracement expected to come up here. It's kind of attempted a couple of times already here on the hourly. So this is, what we want to do here. Just place that. So if you want to go short, right, that's where you want to go short. Just turn that off for it. Just turn that off. Okay. So you clearly, want to make sure you identify your trend, right? So let's say that going from like this, okay, and so just going to give you the perspective, right? Let's go back to that hourly. Okay, so that's the area that had identified right there. It's your entry area, your stop, and normally, of course, you would do this ahead of time, and you want to be selling. You're just on demo here, right? Just paper trading, and so it's telling us you want to enter at 18.18, and I mean you can round that out to whatever you want, right? And your stop loss is going to be at let's call it 30 pips, right? Just so that we have some easy math. And then let's say you're just going to risk $100 there, right? And let's say you just want a one-to-one sort of trade, and you know that if you check out ATI, average true range, commonly on the daily time frame, right? The average true range should be about 70 pips. So you know that getting a one-to-one should be possible, right? And so again, if you're using MT4, you might want to round that out. So that's going to be 0.3 is going to be your lot size, so 0.3, right? And so when you put that in there, let me just turn on these settings so we can see the orders. Okay. I think I put that in. Did I not put that in correctly? No. Entry at there. Stop at 8.5. Okay, so we can put that as, say, 15 pips there. And that could be 60. Okay. Yeah, that gives us a little bit more room there. And then this can be, because that's only like 10 pips. Let's see, 35.15, and that could be just 15. So yeah, even more likely to get that 15. Okay, let's do that. All right, so the auto UFOs kind of give you the the area, right, that you can plan your trades around, and then according to your own risk management rules, you define what your entry and your stop is, and of course you tune that right to the market itself to make sure that when you're looking at the uh, the spreads, because your broker may have different spreads, right? And so you need to account for all that sort of stuff. Um, and uh, and so that would be the thing that you want to make sure you do, right? Is to adjust, do your macro analysis, identify the areas that you want to enter your trade, and then adjust accordingly, to the market itself and what you are familiar with in relation to the market, right? And that way you can make sure that that your planning, your trades taking into all the available information that is needed to make that trading decision, right? And of course, given that we have had quite a move already. If I just go back to the 4 hour, right? Let's turn these UFOs off so we can focus in. Right, we already know that we've actually moved quite a bit already, and so having taking small profits is probably a smart thing to do. And if let's just take a look over here to the right to see if we have some pivot points or any sort of resistance here. So we do have some resistance coming in here and probably all the way down to here on the euro, right? And so we just have to keep that in mind, that price has come quite far already. And so the opportunities, right, for price to give us more than that Still possible if you're an intraday trader, but if you're kind of a swing trader, you know, we could go down further, um, but you know, your entry points are going to be you know, a little bit different if you're on a 4 hour sort of time frame that your UFOs you're waiting for an entry up here if you're, you know, a retracement type of trader, um, right? And so that would take a little bit longer, right, for price to get up there if you're going to do some sort of retracement trade, right? But again, you know, you want to be able to make that assessment, you know, very, you know, time efficiently, and so that's what technology is there to do, right? And so euro, you know, it's one of those uh, markets that a lot of people like to trade because there's a lot of you get a pretty good volatility. You get some nice runs, right? So some very nice runs, and you know, you could just trade euro the whole day, really, and do pretty well at it if you know how it behaves, right? And so euro is in this downward move, and so it definitely biased to the downside, whether you are a swing trader on the 4 hour or if you are an intraday trader, as we were looking at down here, or even if you are hourly trader, you know, and you're able to wait up for, you know, just playing a trade, and if the parameters are there that uh, you know, enable you to get short, put your trade in, and then you just wait for it, you know, go do your other stuff. If you're a, you know, real intraday trader, which I'm not one of those traders that try to trade a 5 minute, or some people go down to like a 1 minute. You know, I really don't want to be sitting in front of my computer the whole day, you know, looking for those, and it's not because you you know, wanted to be a you know, a frequent trader or anything. It's just that if you go down to these lower time frames, you know, these areas form, right? You know, in 5 minute uh, sort of bars, right? Each of these bars tell you, you know, you know, where price traded within that last 5 minutes, you know. So if you want to see those opportunities show up, then you tend to need to be around to see these patterns form. And so and for the UFOs to kind of, you know, identify it as they're building, right? And so do you really want to, you know, spend your time doing that? Some people do, but others would rather just take life a little easier, kind of keep things at these higher sort of time frames, and not worry so much about the minutia, you know, that it mind, you know, kind of getting in on an hourly basis, and then it kind of takes another hour for it to kind of pause and then turn around and then come back out, right? If it goes according to your expectations. But if that's the case, you know, okay, you know, in this sense, hey, look, I'm risking $100 to make $100, or in this case, $90. But you're okay with that, you know. And if your account size enables you to, you know, to risk more, let's say 1,000, right? It's the same setup, right? It's the same setup. It's just that you're now risking, you know, risking more because your account can, you know, handle more, and you're only looking for $100 or $900 return, right? A one for one, and still moving, you know, just 15 pips, which you can't do, right? And that's on an hourly time frame, but you're gonna have to wait for it, right? So okay, so actually, there's a couple of questions here, and as we go to the, you know, come to the top of the hour, uh, what will make the US go up and down? And okay, is Good questions, good questions. What does TK mean? Um, so, so I'm not too sure where T. Let me go back to the dollar there. Sorry, I didn't see your questions um, beforehand. But let me just go back to the dollar here. So let me just answer Dante's questions here. Hey, thanks for being here, Dante. Um, okay, so what will make the US go up and down, and what are the key things uh, that affect the dollar, right? So let's just go to the daily. Okay, so so the things, like any sort of currency, the big things that are going to affect the supply or demand for that currency is going to be, interest rates, which, are, Europe and Japan, they're all zero, and so everybody is looking for some sort of yield, right? And so you either get yield through fixed deposits, or you get to get yield through dividends or fixed income. And so the attraction of so if the central banks, any of the central banks increase their interest rates, then the attraction of that currency is going to be there. So which is why Aussie, tends to attract those who are looking to have higher yields, because Australia has, higher interest rates than practically everybody else. Although the US has had higher interest rates now. If you look at the 10-year, it's yielding about 1.7. So interest rates are the big factor. Um, so well, yeah, yes. So there would tend to be a desire, right, for people to want to, convert their money into US dollars, and that could be, and it's not just the interest rates. Interest rates is one factor. It's also, trade. So, US dollar is kind of unique in the sense that it is a reserve currency, so there tends to be just generally more demand for the dollar in order to purchase oil or other products which are priced in US dollars. But definitely oil is one of those big things, which is priced in dollars. And so if the overall economy is doing well, then, in the US and, let's say the Americans drive a lot more, right? During the summer, so there will be a greater demand for oil, and therefore, oil prices will increase, and therefore you need more dollars, right, to purchase them. Um, and so there's different you know um, reasons why the dollar is in demand. It could be that, hey, look, people just don't like to invest in Europe anymore, or Australia, or and they want to put their money into US assets, right? And so that could be another reason why the dollar goes up against the other currencies, right? Um, yeah. So if it's is larger in the US than Australia, which one would uh, raise the dollar versus the Aussie? So yeah, so if US interest rates were higher than Australia at some point, then yeah, you would tend to have people generally want to put their money in US dollar into the US dollar versus, relative to Australia, right? Um, the virus, well, it's it, you know, the virus can, I guess, in a sense that, if to the extent that it's going to affect trade and the economy, it could, right? It could influence where people see risk, and so that could, lead people to want to move. funds out of the US into other parts of the world, but everybody, is kind of in the same boat when it comes to the virus, in many respects. And, look, it's a very unique scenario where it may not be, the driver of people, demanding US dollars, but definitely it's something currently that we want to pay attention to. But at the end of the day, right, the 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 price action kind of tells you, right? So it's good to understand the context, right? But you want to at the end of the day see how, right? How price is moving, right? Um, well, again, uh, whether it's Biden or Trump or some other guy, in the White House, you know, definitely, again, whether it's any sort of fundamental news, you want to um, take that, into context, right? But like I said, at the end of the day, it's price action that you want to pay attention to, and whether you are able to understand, right? What where are these guys moving it, and so it's not to you know to overly complicate your decision making. These drivers are, like non-farm payrolls, what have you, right? Is all good to understand, the context that we're going into. But at the end of the day, you trade based on price, So that's kind of why, your what the questions you need to ask yourself. Number one is, okay, what's the climate? You know, is the market telling us to buy or to sell? Currently it's telling us to buy, right? I mean, it's clearly moving up, right? And so you're just looking for areas to buy. Um, and again, based on your other sort of training, your other techniques, right? Are you looking you know, um, continue to buy, or is there room enough for that to happen or not, right? And as I was kind of saying here, we're kind of getting up to some areas where we're probably going to experience some sort of a resistance, right? And so to have profit targets kind of beyond this, 93 and a quarter area is still possible, right? But you just want to tighten up your stops. And so, a lot of this comes through experience, through, some training, through coaching, which we do, right? And it's a great questions, Dante. And I'm sure a lot of the other folks here on the call, on this session, as well as those who are listen to the recordings, will have very similar questions to you. So thanks for asking those questions. They're great questions. But if you do want to, follow us on YouTube for our daily sort of market commentary from Boyan and Becky, please go back and take a look at some of those, and that also helps, to understand the context. We also have, as I mentioned, our free membership, right, for you to sign up and take a look at our website. We do have courses available. A lot of these that we're offering are on demand, and so you're able to jump in there and learn pretty much immediately about our technology and how to use that technology within a sort of a context. And also we have coaching, and so these sessions that we run on the coaching are available to whether you're a subscriber or not, um, to our apps. But take a look at our website and browse around. And if you do have any questions, yeah, please feel free to email us. If you want to email me, I'm at andrew@tradictive.com. and we'll be happy to answer any questions about our technology, about our training, about our coaching. Um, and so yeah, just take a look at that, um, and um, and let us know, if we can help you in any sort of way. Okay. All right. Well, I think we are coming to the end of our session. Again, thank you for joining us today. Thank you for joining FX Street here. They also have a lot of great information on their website. Um, News, commentary, as well. The economic calendar is something that always take a look at there. Um, but again, understand the context. It's good to be informed, understand what's influencing the markets. But at the end of the day, like I was saying, what what you need to look at the um, is the price action. Okay. All right. Well, I'm going to end there. Thanks very much for joining. Have a good rest of the trading day, and have a good Friday and weekend. And we will see you again either here on FX Street or on YouTube. All right. Thanks. Thanks, everybody. Take care.